50. They've done in 2250 odd, so it's almost 400 crores off. Pretty much the forex element which has led to the kind of fall that we've seen, or the kind of miss versus what we were estimating. I'll be really surprised if indeed the operational parameters are much different from what we've estimated in our polls. But yeah, the forex loss pretty much dampening the picture for Tata Motors.
Yeah, I was just trying to get in a check on the margin picture, which was expected to come in about 13%. We were expecting some bit of, margins were expected to be around the 13% mark, minus slippages there, but you weren't expecting too much by way of a movement on the margin numbers. So we'll have to see what they've done there. In fact, on the EBITDA front, just the profit before adjusting for expenses, you were expecting a number of about 5650, which is an increase of almost 33%. So some bit of an expansion in margins was expected to come by. 13.1% is what we were expecting. 440 is the forex loss for this number. Tata Motors, of course, has had a splendid run this year. Let's see whether these numbers can bring about, a bit of an interest going forward as well. 236 as we speak, 32% higher for Tata Motors year to date so far. In the session, of course, it's been down about 2%, but as we can speak, the market, despite the forex loss figure, is reacting to those numbers. A bit of a spike really coming in on the stock.
Yeah, the standalone, of course, is a different ballgame altogether. The sales were anyways likely to decline 9% due to lower volumes, so there's no surprise out there. But it'll be difficult to gauge the reaction of the stock or how the market would read it per se, because I think all the other parameters are probably in line. We'll wait for the EBITDA margins. Okay, 13.3% versus 13.1%. So minor bit of an improvement, just a tad bit more than what we would have probably worked around with. So the EBITDA is pretty much flat. I don't think there is too much to take away from here. Sure enough, the reported number is well and truly below estimates, but there's a 440 crore forex element that is affecting it as well. Mind you, also watch out, realization, the picture that will come about as well. That was anyways expected to drop for the consolidated basis, and that was not expected to remain too healthy either. So net, top line in line with estimates, margins in line with estimates, and bottom line, but for the forex element, pretty much in line with estimates. So no taking away. The stock is, of course, correcting 3.5% because of the run-up that we've seen for the past 3 or 4 sessions. Tata Motors has been a standout performer from 227 all the way to 244. No surprise out there that it's 3% off in the session today. Most of the fall came in before the numbers came out, because I think the market was probably working with a number of sub 2400. Okay.
Get in a quick perspective then from both our guests. Ashwini and Mitesh, the stock is now, of course, reversing course, 3% lower as we speak. Ashwini and Mitesh join us for a quick perspective on the markets. Straight to Tata Motors, and what would be your technical call there, Ashwini?
Well, it's likely to consolidate in this 210 to about 245 kind of band. Chances of it breaking 210 are low. So at lower levels, you would try to buy it around 220, 225. It's not an outperformer in the auto space anymore. So if you have to buy an auto stock, maybe you look at Mahindra or say a Bajaj Auto. But Tata Motors is now sideways and probably bottoming out post the large correction. Now overall on the market, chances are that the retest is complete, and once we close below say 5280, 5300, we should move lower from there. So, basically the view is if you close above 5400, you go long. If you close below 5300, then you go short, because then you assume that, the rally is over. So, defensives have done well. So, stocks like Hindustan Lever, ITC, etc. Are showing some strength. At the same time, PSU banking, we didn't rally at all in the entire upside from 5200 to about almost 5400. They are showing renewed weakness. So Union Bank is a sell with a stop about 172, target of 158. Canara Bank is a sell with a stop about 156. target of 342. And HDFC, which had a sharp run up over the last few days, is now correcting. That's a sell with a stop about 710, target of 685.
Mind you, the market is flat and we can keep on going on and on about Tata Motors, the numbers on your screen, but the numbers in a nutshell are that it's pretty much in line with estimates, but for the forex element which has dampened the bottom line. Had it not been for that, probably the numbers would have been in line with estimates as well. And I think we'll get in Yatin in just moments from now, but there is a market beyond Tata Motors which we just need to speak about for a little bit longer, because aside of Tata Motors, Bharti Airtel and SBI are two stocks which have corrected quite significantly and predominantly putting the pressure on the index. 7% off for Bharti, 4.5% off for State Bank of India, and those are bigger concerns for the market at this current point of time. Okay, and before I get to Mitesh on those, since Yatin is with us, Yatin, very quickly, how have you read into the numbers? In line with estimates, I guess.
Neeraj, absolutely, in line with estimates, but the JLR margins have clearly surprised, most of the street people here. Now, we were anticipating a JLR margin of close to 13.7%, and what they have delivered is 14.5%. So clearly, 80 basis points is what they have delivered higher in terms of JLR margins. But the standalone business, Neeraj, continues to disappoint. They have delivered a EBITDA margin of close to 7.3%. On the standalone Tata Motors entity, wherein the margins were anticipated to be higher of 8%. So domestic operations continue to disappoint, but most of the results have been made up by JLR performance on the operating front, and that is why you are seeing the adjusted number post the 440 crore forex that we have seen slightly better than what street had estimated. We had estimated a profit number of close to 2650 crores. They have delivered that. Top line also coming in line with estimates. So net in line with estimates, but the JLR volumes as well as the JLR margins have clearly been outperforming what the street was anticipating. But Neeraj, there is also one component to it, that the tax rate has been quite lower this quarter. I will just give you the exact calculation in some minutes from now. But prima facie, the overall number look decent enough. JLR beating on the margin front.
Right. From a valuation perspective, Yatin, what were analysts talking about, and how much was not priced in about these earnings and the margin picture that they've reflected?
Well, Tanvir, if you see from a valuation perspective for Tata Motors, most of the analysts have a target price in excess of 280 to 300 rupees. Most of them had cut the target price from 330, 360 to 300, 280 levels. But at the current market price, we have seen the stock bounce from 210 to 215 levels to 240 levels. So, we have already seen a 15% appreciation coming in Tata Motors ahead of results. But possibly there is some tax adjustment which is there that needs to be seen. That the tax rate has been quite lower. But one important factor to watch out for would be the JLR dividend. They have paid 150 million pounds in terms of dividend for the first time. So clearly, the things have been turning around, and now the parent company is getting some cash flows from JLR.
Yeah.
Surely enough.
Okay, thanks a lot for that, Yatin. And of course, maybe when we do talk about the dealers is when you probably get in a few brokerage views as well as to what's the immediate reaction on Tata Motors post the numbers. But as I said, there's a larger market beyond Tata Motors that probably needs a